So welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have your USDs for our chart. All charts to be presented are to be of the same time frame unless otherwise stated. We're going to be mixing technicals with fundamentals, making a start with USD slight strengthening against counterparts yesterday, which was a little bit more optimistic. By the way, bear in mind that headlines about the Key Bridge collapse in Baltimore yesterday are still reeling in, and it's affecting the markets slightly, but still it's an issue. Euro USD seems to have stabilized somewhat and remains between the 1.0890 and the 1.0795. On the USD side of the pair, we tend to see as the next big two tests for the greenback the release of the final GDP rate for the US of Q4. That's expected in the early American session tomorrow. While on Friday, we're getting also the core PCE price index. It's for February, and that's expected to show us more or less, or at least verify whether inflationary pressures are still persistent in the US economy or not. On a fundamental level, I would start by noting that we have Fed policymakers which seem to be on different pages. We're getting slight hints which tend to be more dovish by some, while by others we're getting hints that they are a little bit more hawkish still. I expect that Fed Chairman Powell's speech that's during Friday's American session could have a wider effect on the USD, at least on a monetary policy level. Euro USD would tend to maintain our bias for the sideways motion to continue between the R1 and the S1. For a bearish outlook, we would require the pair to break the S1 1.0795 and start aiming for the S2 1.07. On the flip side, should the bulls take over, we may see the price action rising, breaching the R1 1.0890. And next possible target for the bulls would be set at the R2 1.0980. Mind you that there was a peak here which exactly highlights the importance of the resistance level. Okay, let's have a look at the very interesting pair for today. That would be USD JPY. Let's make some small readjustments regarding the labels. And at this point, I would also make some readjustment regarding the support lines and resistance lines. Starting with the S1. The S1 remains as is, actually. As does the R1, the R2, and the R3. So that's locked in. Yet I would be widening a little bit the distance between the S1 and the S2, as well as the distance between the S2 and the S3. And actually, I would like to see them starting with the S2 somewhere here. Note this throw here, which is very interesting. And that would be the 149.20. While I would be setting, let's lock everything in, the S3, I'm going to take it lower. Now, one level could be to match it at this throw here and here, but in my opinion, that's a little bit too wide. I would prefer see this level, which provides support a number of times, Also here and here. I think there is a level there. So that's the 147.60. And once we're at it, allow me to set also an S4. Definitely would be setting it here. This is a true which we cannot neglect. The 146. Locking it in. Let's add also label. Now let's talk fundamentals about USD/JPY. We already covered the USD side. I think that we have interesting developments regarding the JPY. And especially during today's Asian session, I would highlight two issues. The first would be the warnings, which were stated practically by Japan's finance minister, Mr. Suzuki. Now, Mr. Suzuki stated that Japanese authorities will not hesitate to actually take a quote decisive steps unquote. And the wording, I'm mentioning the wording as such because the same wording was used when the bank actually had a market intervention. If I'm correct, that was in autumn 2022. So that's an issue. It seems that the Japanese government has a relative decisiveness to actually intervene in the markets in an operation to support JPY, which could cause USD/JPY to drop considerably. On the other hand, though, I would be noting that we had some statements made by BOJ Governor Ueda, where he practically highlighted the need for the bank to maintain a rather loose monetary policy, or if you prefer, to maintain loose financial conditions within the Japanese economy, thus supporting the Japanese economy. While another board member of BOJ had stated earlier that he sees the case for some normalization of the bank's rather loose monetary policy. But on the other hand, at the same time, he also cites this normalization as being a rather slow progress. So more or less that could, in my opinion, actually weigh on the Japanese yen. So you're getting conflicting fundamentals here. On the one hand, you have Japan's finance minister Suzuki, which warns about a possible market intervention to strengthen JPY. On the other hand, you have BOJ policymakers, among them BOJ Governor Ueda, stating that the bank's ultra loose monetary policy, despite the hike, may not be so easy to reverse in practice. That would mean practically that on an interest rate level, interest rate differentials will continue to weigh on the Japanese yen. It's the prime and foremost factor behind JPY's weakening on a monetary level, and it instigated lots and lots of carry trade. So that was an issue. Now, on a technical level, I would be highlighting two elements here. First is the fact that the price action tested once again the all-time high at 151.95. We also note that we had an upward trend line, which has been broken during today's European session. It seems that the warnings of Japan's finance minister, Mr. Suzuki, seem to have taken the market's attention and pushed like a self-fulfilling prophecy, JPY stronger, i.e. pushing USD JPY lower. Now, should the bearish tendencies intensify for the pair, I wouldn't be surprised to see it breaching the S150.80 and start actively aiming for the 149.20. Now, the 149.20, bear in mind, was a level which was tested on both sides of the aisle. We had one that touched here, but also touches here, which slowed down the bull somewhat. So that's another question. In my opinion, I would maintain a bias for the sideways motion to continue as long as the price action remains confined between the R151.95 and the S150.80. The breach of the upward trend line, in my opinion, is not a signal yet for a total reversal of the bullish outlook. It signals, yes, that the bullish movement has been interrupted, and that's clear. But it doesn't mean the initiation of a bearish outlook. For a bearish outlook, we would require the pair to breach the S1, 150.80 clearly, and to aim, if not actually reach, the S2, 149.20. On the other hand, should the bulls regain control over the pair, I wouldn't be surprised to see it breaching the R151.95 and start actively aiming for the 153.80. Now, the R2 153.80, we have to bear in mind that it goes way, way back. We are now in the weekly chart. Daily. And it was last noted, it had a peak at least at that level, on the 21st of May 1990. That was 34 years ago, almost. The issue here is that after 34 years, it's very, very questionable whether the 153.80 R2 is still valid. On the other hand, one could argue that it's the last indication we have. And definitely besides us, other analysts and traders may have noticed the level. So we still see some validity in the R2. Other than that, the next possible level for the bulls would be the 155.50. For the time being, though, we highlight a possibility for the sideways motion to continue between the R1 and the S1. And the main reasons why are practically three. The first is the breach of the upward trend line, which has been guiding the pair since the 12th of March. The second would be the flattening and narrowing of the Bollinger Bands. You can see it here. And the third is the RSI indicator, which has dropped and reached the reading of 50, which for the time being tends to imply a rather indecisive market. On the other hand, should the RSI indicator retreat further and start aiming, if not reaching, the reading of 30, that would be highlighting a bearish sentiment in the market, which could allow the pair to drop, breach the S1 150.80, and start aiming for the S2 149.20. Enough said. Let's have a look at GBP USD. Now, GBP USD seems to be finding some support at the 1.2615. We already mentioned or discussed the fundamentals regarding the US dollar. Let's switch now to the pound. In my opinion, the next big test for the pound is the release of tomorrow, which is the GDP rate for Q4 of last year. Should the rates remain in the negatives on a quote-unquote level, I would expect that to weigh on the pound somewhat. which could allow the pair to drop, breach the S1 1.2615 and start aiming for the S2 1.2520. On a technical level, once again, I would be highlighting that the bearish movement may not be over just yet. On the other hand, we have a stabilization of the pair. And I think that's pretty obvious. The RSI indicator is also rising. It's still below the reading of 50, but it's nearing. So that's more or less highlighting once again that the bearish sentiment seems to be fading away, or at least easing, and could allow the sideways motion to be maintained. I would expect that should the pair remain rather stable, it would breach the pre-mentioned downward trend line and signal the interruption of the downward motion once again. Should the bears take over, I would expect the price action to breach the 1.2615 support line clearly and start aiming, if not actually reach the 1.2520, which is 95 pips lower. So that's quite feasible for the pound. For a bullish outlook, for the time being, we see such an outlook as being remote, but the possibility is always there, and we should be covering it. So for a bullish outlook, I would require cable to rise, breach the pre-mentioned downward trend line. That's the first signal that the downward motion has been interrupted. Breach the R1 1.27 and start aiming for the 1.2775, which is the next resistance line. Could even go a little bit higher. Okay, let's have a look at USD CAD. You can see how the pair has risen, bounced practically on 1.36. That could go a little bit higher. Corrected lower, took another swing, bounced. And let's make this more clear. Here you go. And that, ladies and gents, is the 1.3615. Let's correct the labels as well. So there is a relative difficulty on behalf of the pair to actually breach the R1. We have also narrowing of the Bollinger Bands, which tends to imply low volatility, which could allow the sideways motion to be maintained. The RSI indicator is still above the reading of 50. It's actually at 56.6, yet seems not to have the bullish predisposition which it used to. For the time being, we tend to maintain a bias for a sideways motion to continue just below the 1.3615. For a bullish outlook, I would require clear break of the R1 and the pair to start aiming, if not breach the R2. To be more exact, the R1 is not an abstract level. It's a level which was tested here, it was aimed for here and here. So for a bullish outlook to emerge, you need a higher peak than this one, a substantially higher peak. So practically the R1 has to be broken and the R2, the price action has at least to near it. And that would allow the emergence of a bullish outlook. For a bearish outlook, I would expect the price action to drop, break below the 20 moving average, the 50 moving average, and the 100 moving average, breach the S1 1.3505, and start aiming for the S2 1.3435. Once again, note how the 50 moving average provided support right here. So once again, for a bearish outlook, I would require the pair to breach all the pre-mentioned moving averages, but also the S1. Let's have a look at the Aussie. It's a very interesting pair in the sense that the price action over the past, actually to be more, since the 21st of March, is revolving around the 0.6535 level, which is now the R1 in our chart. I would expect the sideways motion to continue, and I'm basing that practically on three, sorry. The first, you can see how the moving averages, which is the 200 and the 100, have flattened out, do not diverge, remain very close to each other, huddle, and more or less imply that there's little volatility. We get the same signal by the narrowing of the Bollinger Bands. Note how the Bollinger Bands were wide apart, have narrowed very much in the past 24 hours. And that tends to imply low volatility, which could exactly allow the sideways motion to continue. The RSI indicator is correcting higher, aiming for the reading of 50. It's now at 46.7, pretty close, implying that any bearish tendencies, I wouldn't say have faded away, but definitely may have eased within the market sentiment. And that could allow AUD/USD to remain in a sideways motion, once again rotating its price action around the R1 0.6535. Okay, let's have a look at commodities. I would start with WTI. Now, it's pretty obvious here that WTI remains in the corridor set between the S1 and the R1, i.e. the 79.05 and the 83.10. And we expect the sideways motion to continue. Once again, note how the Bollinger Bands have narrowed, yet not so much as the other pairs. And I would be noting here the commodity channel index, which has dropped to minus 100. That's interesting. On the other hand, the RSI indicator is still below the reading of 50. It's actually at 41. So there may be a residue of a bearish sentiment left in the market, but nothing convincing just yet. I would expect the sideways motion to continue between the R1 and the S1 for the time being. On a fundamental level, we already saw the release of AP's weekly crude oil inventories figure. Today, it's the turn of EIA to release its own US oil inventories figure. For a bullish outlook, I would require a clear break of the R1 83.10 and the commodities price to start aiming for the 85.40. On the flip side, should the bears take over, I would expect WTI's price to breach the S1 79.05 and start aiming for the S2 76.85. Let's have a look at gold, also in a sideways motion, by the way. Let me readjust the levels a little bit. Okay, we have adjusted the support lines. Now we're basing the S1 on the support found here, and that would be the 2146.45. Let's be rounded up to 2147. $2,090 remains, and the S3 is being set quite lower at 1985. $2,222 is the first resistance line. And from there on, the sky's the limit. We're going to be setting the R3 2300. Sorry, the R2. And the R3 at 2,500. Two-way off. 2,400. That's it. Now we're ready. Let's talk direction. Okay, everybody can see that there was a nice upward movement here. Yet the pair stabilized. It hit a low point at 2,147, a high point at 2,222. For the time being, we tend to maintain a bias for the sideways motion to continue. On the other hand, though, I would be highlighting the RSI indicator as well. We're talking about the daily chart here, and the RSI indicator is at the reading of 70, which tends to imply the presence of a strong bullish sentiment for the pair. It's actually at 69.6. You also have some distance between the upper Bollinger Band and the price action as such, which allows for some room for the bulls to play here. So we once again maintain a bias for the sideways motion to continue, but at the same time, we are highlighting the possibility of a bullish movement. Should the bulls take over, we would require the pair to breach for bullish outlook. We would require the precious metal to breach the R1, the 2,222. By the way, that's an all-time high. And I'm not saying here that gold bulls cannot form a new all-time high. That's quite feasible. My worries are that a new all-time high may provide cold feet or some hesitation. But should the demand be present, then I wouldn't be surprised to see the price of gold breaching the R1, the new all-time high, the all-time high, the present all-time high, and start aiming for higher grounds, possibly the 2,300. And I'm basing that resistance level, the R2, on the average movement of the price action of gold in the past months or so. Now, should the bears take over, I would expect the price action of gold to drop, breach the S1 2,147, and I'm setting the next possible target for the bears at 2090. Now, the 2090 used to be a prior resistance line, but given that the price action has moved decisively above it, we have switched its role from resistance to support line. Lower than the S2, we have the S3, 1985, which is quite lower. We're talking about $100 lower. And it's a considerable distance to cover, even for gold's price. But that level was tested once, twice, and also was tested as a resistance line back here. So that's a pretty valid level. I would like to have a look if you allow me, to the 1 hour chart just to see more detail. I think here it's even more clear how there is a sideways motion despite some slight bullish tendencies currently for the precious metal. Back to the daily chart. Once again, we tend to maintain a bias for a sideways motion to continue, yet warn about a possible upward movement. A prerequisite for a bullish outlook would be a clear breach of the R1 and the price action to start aiming for the R2 2300. So that should sum it up. Sorry. From all of us here at IronFX, best wishes for solid trading.
Okay, let's go ahead and get started. So for today's session, we're going to be talking about how to chart like a pro. So basically a crash course on TradingView and how to use TradingView for your analysis. So before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's personal objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So here's our agenda for today. So firstly, we'll look at what is TradingView, how you can use TradingView, TradingView's best practices, and secret TradingView tips. Okay, so obviously TradingView is just something you use when you are trying to figure out how exactly whether you should buy or you should sell to conduct your technical analysis, be it on Forex or even on your stocks. So it's a charting platform. It's also a social network since it does give you the opportunity to comment on others' charts and analysis, and also take a look at what other traders are trading. And is used by 30 million plus traders. So how do you use TradingView? So firstly, you want to load an instrument. In this case, we've searched up Euro USD. But obviously, even if you are searching for a stock, just put in the ticker into the symbol search and you can select any of the different brokers. Add a comparison. To do this, you basically just click on the plus sign and you can compare any symbol. And this is really helpful for correlation. So I'll talk a little bit about that later. But basically, for correlation, it just allows you to analyze another similar stock or currency in relation to the one that you're looking at. So I'll go a bit more in depth in a bit. So something like this. So here we have euro as well as euro dollar as well as DXY on the same chart. So it allows you to see whether they are correlated positively or negatively. So if your analysis on euro USD is bullish, and in the past you can see that on the DXY, it's pretty similar as well. You might be able to use the same analysis for your DXY as your euro dollar. So when it comes to choosing a time frame, it really depends on your own trading strategy. But all you have to do is basically click on any of these time frames here. But you can also customize it. Um, there are more options when you click on this arrow here. Okay, for candlesticks, when you click on this icon, you can control whether you're looking at bars, candles, hollow candles, columns, lines, areas, so on and so forth. Even Heiken Ashi, we also use that. But basically, we normally use candles, as you've seen from our previous webinars. Okay, indicators. So there are a whole bunch of indicators out there. But basically, you can click on this button, search up the indicator that you're looking for. You can even favorite them so that it's easier for you to use them whenever you are conducting your analysis. Chart customization. So you go to chart settings and you can choose the colors of your candlesticks, the appearance, the price lines, all of those. So it's highly customizable, as you can see. And also from here, you can see there are different trading functions as well. So here we're looking at euro dollar paper trading, and you can see that for our sell and our buy, you can just conduct your trades directly on TradingView itself. So you can see here we're buying 200,000 from units from euro dollar. Okay, TradingView best practices. You want to look for charts that are really easy to read, charts that are well designed, and also you want to try and make sure that there are multiple monitors for you to analyze these charts on. Okay, there are a whole bunch of drawing tools as well. Okay, you can see the different trend lines, trend channels. Trend channel would be your parallel channels. There's also the vertical lines, horizontal rays for your support and resistance levels. Yeah, those are the functions that we use most of the time. Okay, secret trading view tips. There's the magnet tool over here, which allows you to it basically allows you to check whether the price is at a weak area or at a strong area. Watch this. Basically, when you click on this icon, you can add a bunch of stocks or cryptos or forex currencies over here so that it's easier for you to toggle between the charts. Layouts, so you can add multiple layouts as well for your to make your analysis easier. Okay, and screenshots. Just click on this camera icon and it's easy for you to share your analysis as well onto other platforms. Okay, some alerts. So you can also indicate what are the conditions for buy or sell. So it will alert you if those conditions are met. Okay, sometimes they also include, if you're looking at currencies, they might also include some news that's come or economic data releases that's coming out during that day or during that week so that you can be aware of the volatility that comes with data releases. Okay, calendars. So yeah, so the calendar icon is here. So also give you an economic calendar and earnings calendar as well. Yeah, so you can see that there's a whole bunch of different functions all on one platform. Okay, now I'm gonna show you guys let me just pull up my trading view and we can go through some charts together. So if you have any requests, feel free to pop them into the chat. Okay, so you can see here from this book, let me just move my camera. So I'm gonna load a layout for myself. You can see I have one over here. So I'm just gonna use this. I'm gonna use my own charts. But if you want to create a new layout, you just click on new layout. Oop, yeah, and then you can label it accordingly as well over here. Okay, rename, and just add in a new name here. But I'm going to remove that since I already have my own layout here. Okay, I'll delete this later. Sure. Okay, so I think maybe to start off, let's take a look at our euro dollar together. Okay. So for euro dollar, okay, maybe to start off with the basic functions, as we went through in our slides, the watch list is over here. Click on it and then you can add, let's see here, you can add some more symbols to your watch list. Can be cryptos, commodities, currencies, really anything. Okay, and then this toolbar here makes things pretty easy because it has all of the functions that we typically will use when doing our analysis. So I'd like to start off with our higher time frame so that we get an idea of where prices are headed towards. Okay, so on our higher time frame, we see that prices are moving in kind of a ranging, they're kind of ranging. Let's see if there is a, okay, so we do have this ascending trend channel as well. We also have an ascending trend line here. So what makes a valid trend line is if there are at least 3 touches on it. Just to recap, okay, so at least 3 touches, okay, for your trend line, and for our trend channel, you want to make sure you have at least 2 touches on the top and the bottom of our trend channel. But in this case, obviously, we have 3, but 2 is enough. Okay, so it's moving in a uptrend on our weekly time frame. Let's take a look at our daily time frame. Okay, this is not a valid trend channel or trend line because we don't have 3 touches on this line here. Okay, so we can see prices are definitely moving in an uptrend. So let's go in with some support and resistance levels. So for those, we will use the horizontal rays. Okay, So this is my first resistance. This level here will be my pivot. And lastly, my first support just here. Oh yeah, so when you click on this template, you can actually apply some templates to your support and resistance levels when you're labeling them. Okay, and this is just in your toolbar as well. Okay, now let's look at our 4-hour time frame. Okay, and this is my second resistance. And my first support here. Okay, I'm just going to label this as a intermediate level since price is currently at that level. Okay, and then my first support instead I will put it here. Okay, um, so next we're gonna pull out our Fibonacci levels. So for the Fibonacci levels, you basically click on this icon, right? And it's really similar to the MT4 icon as well if you're using that. Okay, and you click on settings to look at the different levels that you want to pick. So for retracements, we usually pick these 5 levels. Okay, and you can see that my 38.2 lines up with my first support, and my 23.6 as well. So it doesn't have to line up exactly at those levels because we are looking for confluence areas instead of actual levels. So that's why as long as they are kind of near that area, that's good enough. Okay. So I'm just going to keep the 23.6 and 38.2 so that I make sure that my charts are clean and clear for me to add more Fibonacci levels. Just a second. Okay. So let's see if we have any other Fibonacci levels first. Okay, I have a question. Okay, I think um you can actually add in a drawing template here. So for example, there are all of these different names. But if let's say I want to add a third resistance, okay, um, okay, go to settings. You can change the color as well, and then my text here would be third resistance. Okay, so it's popped up here. So every time that I want to have a third resistance, for example, here, okay, I just have to click on this and then, oh, I think I didn't save it earlier. Yeah, okay, so this is the third resistance, so I'm gonna save this, save as the, yeah, here. Okay, so again, every time I want to use it, I just click on this and it will pop up here. Okay, so that's how we label the first and second support and resistance levels. Okay, where was I? Okay, next let's look at Fibonacci projections. So for projections, which are basically the levels with 3 points, you click on this icon instead. So I think earlier it was looking like this. So if you click this arrow, you click on trend-based flip extension, it'll give you the Fibonacci with 3 points. So that's the one that we're looking for um for this Fibonacci technique. So actually, if you're new to Fibonacci techniques, you can also take a look at the Forex Army. I might briefly go through a little bit of it in this webinar, but I won't go too in depth. But yeah, so let me just show you guys. Ooh, okay. So you can go into forexarmy.com and it'll give you the different types of Fibonacci techniques. So the one that I mentioned earlier was a projection, and we use the Fibonacci extension um, tool. Okay, so yeah, it gives you all of the basics for your Fibonacci techniques. Okay, but for this one, I guess I'll just briefly go through why we are using it. So for Fibonacci projection, you're looking for a flash kind of shape. So something like this, like a lightning bolt shape. Well, like that. Okay, so oop, so yeah, so you can see that for our projection, we use 61.8, 78.6, and 100%. Okay, you can see my 78.6 is in line with my second resistance. My 61.8 is also in line with my first resistance. So I'm just going to keep those two levels. Okay, so okay, I think that's all the levels that we have. Maybe another retracement here. So another trick, instead of doing what I did earlier and uh, clicking on the settings and choosing individually, you can also just click on this and click all fibs, and it'll give you all of the Fibonacci levels so that you can see, like at one glance, what are the levels that line up, which in this case, you can see our 61.8 lines up nicely with our first resistance. Okay, so I'm just going to keep that. And you can also click this again and just select the one that you want. And this box here is a box that I use to highlight the different levels. So here to here, since we have a confluence area with this 261.8 Fibonacci levels. So confluence basically means that there's more than one Fibonacci level that lines up with our support and resistance. So that's just basically what a confluence is. Okay, so now the next step is to click on our indicators and look for indicators that support our analysis. So starting off with Ichimoku and MACD, because at one glance you can see exactly um what the signals are. So on our MACD, it's giving us a bearish signal, but on our Ichimoku, it's giving us a bullish signal here. Okay, so when this happens, that's the reason why you kind of want to make sure that you know how to use a few indicators. Um, so for example, next let's use RSI and stochastic. Mm, okay, so for example, for our stochastic here, okay, you can see that price made a higher low, whereas on our stochastic, it made a lower low. So this is a bearish signal, and it supports our analysis that price will continue to drop from our pivot. Okay, so another thing you can do is when you're clicking on these arrows to show the direction of price, click on the template. And you can create your own template with a bearish arrow or a bullish arrow being green color. So it's the same thing as what we did for this line. Just click on it, click on settings, change the color, the style, anything you want, and then save it as a template. Okay, so you can see that both our MACD and our stochastic gives us the same analysis, or rather the same signal. Okay, so for the vertical lines, I use those when I'm looking for divergences. So basically what we are looking at for stochastic, when price makes a higher low, whereas stochastic or RSI give us a lower low, that's what we call a divergence. So I use these two vertical lines to indicate where the area in which the divergence is occurring. Okay, do you guys have any other questions or requests? Okay, if not, let's take a look at another chart. Maybe we'll look at gold. So, if you're looking at, oh yes, I wanted to talk about correlation as well. So basically, you just click on this search bar and you can search whatever symbol you are looking for. And these are the list of brokers. So for yeah, that you can select from. Yeah, but typically the prices and the charts would be about the same between brokers. Okay. Okay, I just want to show you guys some correlation things that you can do on TradingView as well. Okay, so this here is my FX book, and it basically gives you a list of all of the currencies that are correlated. So we typically will look for currencies lower than minus 80 and higher than 80. Okay, and you can choose your time frame depending on your trading strategy. I'm looking at 4 hours. So you can see here, for example, AUD, CAD, and Euro JPY, it's very negatively correlated. Or actually, let's look at AUD and USD JPY. Oh wait, what? Yeah, AUD CAD and USD JPY. So to start off, I'm just going to use two different charts to show you. Okay, so this is what our USD JPY charts look like, and this is what our AUD CAD charts look like. So if you're looking at them from two separate tabs, you can't really see any correlation between the two, negative or positive. So when you click on this compass or add symbol and search for USD JPY, okay, we'll normally look at the same price, same percentage scale. Okay, you can see how negatively correlated it is. So if we are expecting a bullish signal from our AUD CAD, then we can expect a bearish signal on our USD JPY, since they are almost negative 100% correlated. Okay, yeah, so that's basically what this plus symbol is for. It's quite useful when you use it in conjunction with this table here. Yeah, so that's for our negative. Maybe I'll do another example for a positive correlation. So here we have AUD USD and AUD CAD being 97.2% correlated. Okay, so I'm gonna look for AUD USD. Same percentage scale. Okay, so you can see exactly how correlated they are. Right? You can see that the price is pretty similar. Price movement is very similar here. And that's because they are 97.2% correlated. Okay, so this makes it really easy when you want to enter more than one price without having to analyze so many different charts. Since they are so positively correlated already, your analysis that you did for maybe AUD CAD can also be applied for AUD USD. Okay, are there any questions? Okay, if not, let's go ahead and analyze another chart together. Okay, so on our weekly time frame, you can see that prices. Oh yes, so if you click on this arrow like we did earlier, you can see there's different ranges, different days and months that you can customize as well. But I just like to stick with weekly, daily, and 4 hours. Okay, so let's start off by seeing if we have any trend lines or trend channels. Okay, I don't think so, but we do have an ascending or rather an uptrend here. And on our daily time frame, Okay, we'll do the same thing. Okay, but this is obviously not a valid trend channel since we don't have at least 3 touches, or 2 touches rather. But we can all agree that it is moving in an uptrend. Now in our 4-hour time frame, you can see price has started to drop. Okay, so going in with our support and resistance levels again, I'm using this horizontal ray, firstly placing it at this first resistance, this swing high. And then my first support, I will just place it here. Okay, now going in with some Fibonacci levels again. I'm going in with a Fibonacci retracement, or rather, actually, this is a Fibonacci extension. So it's a Nike tip. You can see this tip kind of shape. Okay. So here we can see that my 127.2. Oh wait, okay, because even though this 127.2 lines up with our first support, it's no longer valid because price has already broken out of that area. So I'm just going to be highlighting this 161.8. Okay, zooming in, I'm gonna use the same technique over here. Okay, you can see the 127.2 lines up nicely with my first resistance. Okay, now I'm gonna look for a retracement. Okay, and I'm gonna add another level here at this 50% level that's also in line with our this swing high here. Okay, my 23.6 also lines up. So I'm just gonna keep my 23 and 50%. Okay, so you can see this area here, we have a confluence area. So price is likely to be attracted to such areas of confluence. So we will see it continue to drop. Yeah, but we'll have to see if it'll break out of this area and head towards our second support here. Okay. Okay, so let's look at some indicators to support this analysis again. You can see price is moving above the Ichimoku cloud, giving us a bullish signal, whereas MACD is giving us a bearish signal. If we look at RSI and stochastic, okay, between these two areas, okay, we have the same thing as earlier. Price is making a higher low, whereas on our stochastic, it is moving in a lower low, which is also giving us a bearish signal. So it also supports our analysis. Okay, someone asked for Ethereum, so we'll definitely go through that now as well. Okay. So on our daily time frame, okay, I actually want to use the Coinbase one. Okay. So on our weekly time frame, we see prices definitely moving in this uptrend. And on our daily time frame, it's also in this uptrend. Okay, so let's just go ahead and add our support and resistance levels again. Over here, we have an overlap support. And my first, I'm just going to place this here. This is an intermediate level or my pivot. And then my first resistance, I'm going to place it here, maybe here instead. Because I don't want to cut too many bodies of candlesticks like this, okay, because it is very messy here and it makes it less effective. So I want to put it somewhere here instead. And lastly, my second resistance here. Okay, I'll get back to your question in a bit. Let me just finish analyzing this chart first. So same thing, I'm looking for Nike tick here. All fibs can see my okay, my 127. Actually, this area lines up with our first resistance. 127 also lines up with our pivot. Okay, over here. 161.8 also lines up with our second resistance. So I'm gonna keep both of them. Okay. We don't typically use the other levels, but yeah. This technique is basically for levels above 100. It's just that based off of back testing, we've realized that the 127 and the 168 are the most effective levels. So it's still obviously up to you what you choose to use. And now I'm gonna use a retracement. Okay, you can see my 23.6 lines up with my first support. Again, looking for retracement. You can see my 78.6 lines up with my pivot. Okay, so this is a confluence area as I've highlighted here, and we can definitely expect a lot of resistance here. Okay, yeah, so we might see it reverse off of our pivot or test this area quite a bit before it moves upwards towards our first resistance. Let's look at some indicators again. Okay, MACD and Ichimoku are giving us a bullish signal, which supports our analysis. Okay, someone asked if I have a marked up chart, but I want to look at the same asset on a clean chart. Mm, you can actually open another layout and look at that same chart on another layout. So on the first layout, you have all of your annotations, your analysis, and then on the other chart it can be clean one. Also, can I mark up example dollar yen on two charts, one with Nike tick and the other with a different set, so they can compare the two. Okay, so see, so for ETH, I have all my markings here, but you can see on my ETH here, on a new layout, it's completely clean. I think that's your question. Marked up chart, but I want to look at the same asset on a clean chart. So this is the marked up chart, this is the clean chart. And also, can I mark up USD on two charts? One with Nike tick and one with a different set of indicators. Oh, yeah. So if you want to create a new layout, you click this arrow, right? And then you just add a new layout here. And then you do the same thing. So we were looking at ETH earlier, that's why we're looking at ETH now. We're looking at USD here. This is your marked up chart, and your new layout will not have any marks on it. Oh, you can't see? Oh, wait, let me just take a look. Oh, no, it does. It's just this new layout button. That's all. Yeah, it's a really small arrow here. It says manage layouts. Okay, and then load layouts, and then you can get rid of any layouts that you don't want. Yeah, that's it. It's this arrow here, and then it's a new layout. When you click new layout, it'll open another tab, and it'll be blank, but looking at the same asset. Okay, that's good. Um, can you mark up USD on two charts so that you can compare the two? Yep, so you can do it like this, so like have it on two layouts. If you want it, yeah, if you want it side by side so that you can compare, you can also do that as well. Let me see. You just click on this square, okay, and then you click on this icon here. So you can do one analysis here and then one here, so that you can compare it side by side. Okay. Yeah, I think that's all I have for you guys. If there's no other questions, that's it for today. Thank you guys so much for joining me. Have a great rest of your week, and I'll see you guys again next week. Thanks, everyone. Thanks, guys. Bye.